Welcome to FXtech's comprehensive analysis of the Australian dollar versus the US dollar for the week of October 13th to 18th, 2025. In this presentation, we'll examine the latest market developments, technical indicators, and provide actionable trading strategies based on data from TradingView, investingLive, ActionForex, Forex.com, and DailyForex. This analysis was prepared on October 20th, 2025, to give you the most current insights into this important currency pair. Let's dive into the details. Our analysis draws from 5 authoritative sources: TradingView, investingLive, formerly known as ForexLive, actionforex.com, Forex.com, and DailyForex. As of October 17th, 2025, AUD USD is trading at 0.64958, up 110 pips, or 0.17% from the previous close of 0.64848. The pair opened at 0.64847 and has ranged between a high of 0.65027 and a low of 0.64437. Trading volume stands at 102.55 thousand ticks, indicating moderate market participation during this consolidation phase. Looking at performance across multiple timeframes, we see mixed signals. The one-day performance shows a modest gain of 0.17%, while the 5-day performance is slightly negative at minus 0.15%. The one-month view reveals a decline of 2.32%, reflecting recent weakness. However, the 6-month and year-to-date performances are positive at 1.94% and 5% respectively, though the one-year performance remains negative at minus 2.97%. Technical indicators show a neutral stance across both oscillators and moving averages. The key observation is consolidation after the decline from 0.6706, with the pair testing the 55-day EMA resistance. Several important factors are influencing AUD USD. On the Australian side, the RBA maintains its cash rate at 3.60% amid persistent services inflation and steady labor conditions. China's new export restrictions and additional port fees are pressuring Australian exporters, while US-China trade tensions continue to escalate. In the US, Fed's Musalem indicated potential support for another rate cut if job risks emerge, while the Atlanta Fed GDP Now estimate is ticking upward. Government shutdown concerns are sparking volatility. Market sentiment has improved with U.S. equities posting solid gains, the Nasdaq up 0.52%, and the VIX Fear Index down 8.46%, indicating reduced market anxiety and risk-on sentiment. Oil faces glut fears with WTI potentially hitting $52, while gold has rallied for 9 consecutive weeks. The technical picture reveals critical levels to watch. On the resistance side, the 55-day EMA at 0.6545 is the most important level, followed by minor resistance at 0.6628, the recent high at 0.6706, and the Fibonacci 38.2% level at 0.6713. Structural resistance sits at 0.6941. Support levels include the recent low at 0.6439, cluster support at 0.6413, and the Fibonacci 38.2% level at 0.6403. The weekly MACD shows bullish convergence, suggesting potential for a medium-term trend reversal. However, the current technical bias remains neutral to bearish as long as the pair stays below the 55-day EMA at 0.6545. The chart pattern shows consolidation after the decline from 0.6706, with a break below 0.6519, signaling rejection at the 0.6713 Fibonacci resistance. For the next 1 to 2 weeks, we see 3 scenarios. The bearish scenario carries a 60% probability, targeting 0.6413 and 0.6403. The entry strategy is to sell rallies towards 0.6500 to 0.6545 with stops above 0.6628. Key catalysts include weak Chinese data, US-China tensions, stronger USD, risk-off sentiment, and commodity weakness. The neutral scenario has a 30% probability, expecting range-bound trading between 0.6439 and 0.6545. Buy at 0.6439 to 0.6460. Sell at 0.6439 to 0.6460, 0.6520 to 0.6545 with tight stops of 50 to 80 pips. The bullish scenario carries only a 10% probability, targeting 0.6628 and 0.6706, requiring a break above 0.6545 with stops below 0.6500. Monitor Australian employment data, U.S. economic indicators, China data, Fed speakers, and trade developments closely. Looking at the 1 to 3 month horizon, the bearish scenario carries a 55% probability with targets between 0.6200 and 0.6400. 6 key drivers support this outlook: persistent U.S. China trade tensions, weak Chinese economic data, commodity price pressure on iron ore, coal, and energy, a strong U.S. dollar environment, risk-off market sentiment, and the technical factor of remaining below the 0.6713 Fibonacci resistance. This scenario assumes continued global economic uncertainty and sustained pressure on commodity-linked currencies. Traders should watch for confirmation through breaks below key support levels and deteriorating risk sentiment indicators. The bullish scenario for the medium term carries a 45% probability, targeting 0.6800 to 0.6950. This outlook depends on 6 key drivers: U.S.-China trade de-escalation, Chinese economic stimulus measures, commodity price recovery, Federal Reserve rate cuts, RBA policy divergence with a hawkish stance, and critically, a break above the 0.6713 Fibonacci resistance. The critical technical factor here is a sustained break above 0.6713 Fibonacci resistance, which is required for bullish confirmation. Without this technical breakout, the bullish scenario remains speculative. Watch for positive developments in U.S.-China relations and Chinese policy announcements as potential catalysts. Our primary strategy is to sell rallies between 0.6500 and 0.6545. with stop losses above 0.6628, risking 80 to 130 pips. Targets are 0.6439 for 60 to 110 pips profit, 0.6413 for 85 to 135 pips, and 0.6403 for 95 to 145 pips, offering a risk-reward ratio of 1 to 2 to 1 to 3. An alternative range trading strategy involves buying at 0.6439 to 0.6460 and selling at 0.6520 to 0.6545 with 50 to 80 pip stops, but only if the range holds for several days. Key risk management rules include risk maximum 1 to 2% of capital per trade, always use strict stops, take partial profits at targets 1 and 2, while trailing stops on the remainder. Monitor AUD JPY and NZ USD for confirmation. Stay alert to Australian employment data and Fed commentary. Use appropriate leverage, and maintain emotional discipline by sticking to your plan. Remember, this analysis is for educational purposes only. Trading Forex carries substantial risk. Always conduct your own research and consult with a qualified financial advisor. Thank you for watching FXtech's AUD/USD analysis.